Hello there, I hope you're doing well. Today I want to talk about precision swing point, also known as PSP. The market always forms a PSP before every significant reversal, a cracking correlation at the candle level, and the basis of the true order block entry. What a swing point is basically a three candle patterns. Candle 2 has a wick that extend beyond both candle 1 and 3. Candle 1 is the swing candle. For a bullish swing point, the wick is in the low side. For a bearish, the wick is on the high side. Let me show you the first slide. For example, something like this. All right, this is our first candle. This is our second. This is our third. Let's say we're on a hourly time frame, and we found let's say we have a precision swing point such as PSP. Right here, let's say this is NQ. We formed a bearish um PSP, and on ES, let's say we formed a bullish PSP. Let's say we're on an hourly time frame. If you zoom in, guys, let's say on a minutely or 5 minute, whatever time frame, show micro time frames, you can find power 3. Power of 3 is simply this accumulation. We manipulate, take out the Q1 high, let's say, and then Q3, which is our distribution, reverse to the opposite direction. Let's say bearish in this case. What makes it precision? Candle 2 must close differently across correlated asset. Let's say for ES, for S&P 500, it's Nasdaq and Dow Jones, for example. Bullish on one, bearish on the other, at the exact same time. If only one asset prints a swing point, but the candle closes differently across assets, such as different colors, right? On the same time, let's say we formed a bullish on Nasdaq, we formed a bearish on S&P 500. But at the same time, let's say 7 p.m., it is called a precision candle, PSC. Both have valid cracks in correlation. Let me show you an advanced example. This is our Nasdaq, this is ES, this is Dow Jones. Now, on Dow Jones, we formed this low at 6 p.m. All right. On Nasdaq, we formed this low at 8 p.m. On the S&P, same thing. On 8 p.m., we formed the low. First of all, there is SMT. All right. There is SMT. What SMT? It's a sequential SMT. Why? Pay attention to Nasdaq. Nasdaq formed this, took out that low, which is the Q1 Monday on Tuesday. This is a sequential SMT. Yesterday I made a video about that specifically. Highly recommend you to watch it. Now, look, on 6 p.m., pay attention to that candle. Let me zoom in. What candle is it? It's bearish candle, all right? On Nasdaq, it's a bullish candle. On S&P, it's bullish as well. I know this was a little hard example, but let me be honest with you guys. I don't focus too much on PSP, precision swing points. I focus more on the cracking correlation such as SMT, sequential SMT, on the time itself. But of course, it's part of it. Sequential SMT, of course, you will have basic understanding of it. It will help you. But will you use it always? Probably not. 3 uses of PSP. First, confirming sequential SMT. Look for PSP on the candle that creates the sequential SMT or within a few candles after. The closer the better. Don't wait more than 5 to 7 candles. The move has likely already started. What this simply means is just without a sequential SMT or SMT, a PSP is nothing. Second, continuation entries. Once higher time frame order flow is established by sequential SMT, any PSP in line with that flow can be an entry. PSP wicks are reactive. Treat them like an order block. Like whenever we form the PSP on a swing, let's say high or low, whenever we tapped into it, that is a good long. Why? Because that is also our true order block, or that could be. Third, spotting accumulation. Multiple back-to-back PSPs in alternative direction equals consolidation, low probability. sit out until one side breaks away. That simply means when the market's accumulating, wait. Yes, you might find, spot PSP on the highs and on the lows, but wait for the market to break out and then find your direction. The asset strength rule. In bearish scenario, the asset prints a bearish candle as a PSP is a weaker asset. Enter there. Wait. The asset prints a bullish candle is stronger, more likely to get run above, souped, right? If you see the soup happening, that soup often creates a sequential SMT, an even higher probability entry. Let me show you what this example means. For example, let's say we found the PSP on the highs. What it simply says, wait, let's say this is NQ and this is ES. Where would you place your entry? This is weaker. Nasdaq is weaker. Why? Because we found the bearish. This is first, let's say for first hindsight, right? First idea of the market's about to reverse. Whenever I will not enter here. You know when I will? Whenever we probably reach back or tap into it, or you know what's a better case scenario when ES takes out this high, and however on Nasdaq we don't, and then it will be a better entry for me then to enter and then target lows. Precision swing point in gaps. A PSP forming inside the Fair Value gap is a very high probability. The gap is already a draw and the PSP confirms price rejection from inside it. Stack this within sequential SMT, you have a multi-stage cracking correlation setup. Now guys, it's very rare to form a PSP inside the Fair Value gap. But however, you know what repeats itself over and over is whenever we have a cracking correlation such as SMT or sequential SMT inside of a valley gap. To me, that is enough. I don't need to wait for the PSP. But even let's say we add a PSP to it, it will, it's a very, very high probability setup. The PSP truth. Markets move from PSP to PSP. Once you see them, you'll never look at the chart the same way again. It's very rare for the markets to form PSP all the time, all the swings, but however, it does. So just train your eyes, open your eyes, just compare it with the other assets, and then you will be surprised how the markets move from a PSP to PSP. Guys, I hope you got something from this. Let me know what question you have. Leave a like and subscribe, and see you next time. Be safe.